Groupon closed its second day of trading at just under $26 a share, down just a bit from Friday's debut. So what does Groupon's offering mean for other upcoming tech IPOs? Our next guest has called Groupon the next web van and compares Zynga's revenue to a roller coaster. Francis Gaskins is president of IPOdesktop.com. He's been watching pre-IPO companies since 1996. These days, he's watching Imperva, Living Social, Angie's List, and of course, Zynga. He joins us now from Culver City. Francis, welcome to Bloomberg West. So, got to ask you, first of all, what's your impression of how Groupon has performed over the last couple of days? Of course, it was a pop on Friday, but today, relatively flat, in fact, dropping about 1%.
Well, it performed like all these companies do that are internet-based, that have internet customer subscribers lists that are very, very large. What happens there is you have a lot of people that are enthusiastic about what they're doing, and they buy, and they don't know anything about valuation, or standard metrics, and they don't really care. They just want to be in. So it was definitely a good deal for the company, and as I said, the underwriters and the flippers. I think the error is going to gradually come out of the tires. I mean, they only sold 5.5%. So what they're really doing is setting up for a big secondary. And the company said it was cash flow positive, but when their rate of growth slows down, I'm not sure that they're going to be cash flow positive on an internal basis.
Now, what is Groupon? How does this signal anything for upcoming technology IPOs?
Well, that's a good question. And what's interesting is about 3 or 4 IPOs filed today. And I think a lot of that happened because Groupon came and it turned the attention of a lot of people into the IPO market. And there's some tech companies that filed, and Delphi filed again. There's a huge backlog in IPOs. So, and then even last week, on Wednesday and Thursday, a couple of IPOs filed that are happening this week, Chesapeake and LRE Energy. So I think the IPO window is opening a lot wider, a lot faster than people thought.
Now, we've been waiting for Zynga. We had seen reports that Zynga might go out in November, though not seeing any indication of whether that is indeed the case. We did see an amended S1 filing last week, which had some surprising new numbers, that earnings have actually decreased by about 30-some%, and that just a very, very small percentage, only under 5% of people are actually paying money to use Zynga services.
Right. I think Zynga is trying to reinvent itself, and it's really late in the game to reinvent yourself. They were talking last August, about a $14 billion valuation. There's no way, absolutely no way they can do that. If you look at the sequential decline or the sequential increase in revenue, in the quarterly revenue, it goes. Let's see, it goes 24%, 15%, and 10% for December, for March, June, and September. So the rate of growth of their top-line revenue is down. That's not good. And if you look at the profit margins, the quarterly is like 22 for the last 4 quarters, 20%, 7, 0, and 4%. So their quarterly profit margin is very erratic. They have no visibility. They have no predictability. What they'll tell you is they're investing for growth. Well, yeah, that's great. But that really doesn't work in this. This is a hardcore market. And they want Zynga stock will come and it'll go up because they have a lot of really enthusiastic people, and they're going to buy it, just like they did Groupon, just like they did all the internet stocks. All those stocks came out and they popped in the first 30, 45 minutes. They never saw that high again.
But Francis, why hasn't Zynga set a date yet? I mean, why not just go ahead with it?
Well, they haven't. They're probably waiting to see how their December quarter is, and it's been very erratic. There's no predictability. They're coming out with new games. They're trying to establish new partnerships. It's very much of a company that's redeveloping itself. They could come out, and as I said, they could IPO, and the IPO would go. But there's no way that they'll have a $14 billion market cap. You just can't have that. The first 6 months' earnings were $30 million. You just can't do that.
Now, we are waiting for some other tech companies to get out of the gate, including Angie's List, Jive Software. How much interest is there in some of these other less brand name IPOs?
Well, those IPOs are all around the $100 million or less level, so there can be good interest, and the stock might do well. Angie's List, I know there's a lot of excitement in that. I really don't like it. In the September quarter, they did revenue of $24 million, and they lost $17 million. I mean, the numbers are a disaster on a quarter-by-quarter basis, and their $24 million was up only 20% from the June quarter. So, I mean, I know they have 820,000 subscribers, and that's great. But by now, they should have had a profitable income statement, so I just don't believe that one. There's one that's coming public they just filed today called InvenSense, and they put a gyroscope in handheld game devices. They earned 43. Their revenue was 43 million in September, and that was up 21%. Their earnings were up 28% to about 11.5 million. And if you annualize the September numbers, that's coming at 13 times earnings and 4 times book. Angie's List is coming at something like 26 times book. I know these numbers I know people buy an emotion, they sure do, but underneath, over time, the numbers have to make a difference.
So are there any upcoming tech IPOs that might surprise us?
Well, as I said, InvenSense filed today. They were going to go public August 8th last year, but then they pulled it, probably because they saw that their September quarter revenue was good. There are other companies that are tech-oriented. I think one is Therapeutics. They help people do research faster in semiconductors, but that one has nice top-line revenue growth, but they're losing money. And then there's one coming public in a couple of days in Perva. They have their revenue for the last 4 quarters has been relatively flat, but they're losing about $3 million a quarter. I think what's happened is Groupon has really got some of the speculators back in the market, and they're hungry for companies to have top-line revenue growth. They're overlooking the fact that some of them are quite a few of them are still losing money.
All right. Well, we'll be watching some of these upcoming IPOs to see when indeed they come out of the gate. All right, Francis Gaskins, thanks so much for joining us here on Bloomberg West.